Well, happy Friday and welcome to this edition of the Daily Moo on the last trading day of January 2026. Overnight, the markets were a bit mixed. The Dow was up with 22 of the 30 stocks rising. Counter to that, S&P was down slightly and the Nasdaq was down even further, down 0.7 on the back of Microsoft's result yesterday, which pushed the market further down with Microsoft dropping 10%. Which we'll talk a little bit about in a second. The other thing that happened is the VIX was up, so a bit more volatility in the market. 16.8 it closed, up above the sort of 16 level, which is starting to get a little bit bearish, but still a long way to go to have those peaks in VIX that we had earlier in the month. The Hang Seng rose 0.5 and the ASX 200 was unchanged yesterday in the Australian market. So turning now to a little bit more to this Microsoft result, and Microsoft dropped today 10%. Counter to that, Meta gained 10%. And there's sort of three clear reasons why this has happened. So one's up 10, one's down 10. The first real point is earnings versus expectations. So Microsoft's had a very solid result, but its forward guidance was pretty mixed and disappointing. Azure growth and AI monetization didn't quite beat already highly inflated expectations. Meta, on the other hand, its earnings and guidance crushed expectations, and therefore that's why it was up 10%, especially on its advertising demand and margin expansion. The second point is really around the cost of AI. Microsoft have got a heavy AI capex, and it's starting to hit margins now. Investors are questioning near-term returns on this massive spending, and any questions on the spending obviously causes the stock to fall. Meta itself, as AI is lifting its returns, it's got better ad targeting because of AI. Its higher engagement and strong free cash flow has definitely helped in terms of the cost of AI. The third area really is around positioning and sentiment. Microsoft's it's a crowded AI safe trade, and any wobbles triggers profit taking, as we saw today, down 10%. Meta, it's still seen as a re-rating story, and last week we talked a little bit about the communication services area. It's the second biggest stock in this area behind Alphabet. And it's really around cutting costs, and its strong results reignited bullish momentum. Hence, Meta was up 10% today. What I'd like to do now is turn to the focus for today. The focus today really is another sector in terms of the 11 sectors in the US, and the sector I'd like to look at really is around healthcare innovation. It's a sort of subsector of the healthcare sector, and with sort of blocking out the insurers or the healthcare insurers and really focusing on biotech, medtech, diagnostics, and healthcare AI. And it's really the drivers of this whole sector. It's drug innovation, medical devices, diagnostics, and AI-enabled healthcare. So what's happening here in this area? And often healthcare is seen as a defensive sector, but the market is now re-rating it in terms of a growth story because of what we're seeing. So new drug breakthroughs, especially in oncology, rare disease, and metabolic therapies. Firstly, the second one, medtech innovation, particularly around robotics and AI-driven surgical tools. The third one is the diagnostics and precision medicine, becoming mainstream with faster and cheaper testing. Mainly, a lot of it's driven by AI. And then healthcare AI as well is really moving from hype to real revenue, and it's improving outcomes and reducing costs. So the sector is no longer just a slow growth healthcare area. It's now an innovation-led growth. So that's really what's happening. So why should you be interested in this? There's three powerful characteristics here. One is structural demand, the second innovation, and the third one's diversification. So we look at the first one first, structural demand. we're all getting older. The population is aging overall, and chronic diseases are not going away. So, structural demand will continue to drive innovation and revenues within the healthcare sector. Innovation tailwinds, we've got new therapies and tech are creating multi-year growth compared to where we were, say, 5 years ago. And really, diversification, healthcare innovation often decouples from the broader macro cycle. So if you think the market may wobble a little bit, then often healthcare is one area that people will still spend money on, and therefore look out that as a counter-cyclical part of the market. So what are the opportunities here? And let's have a look at some of them in terms of subsectors. So one I mentioned earlier was biotech and specialty pharma. Think of stocks like AstraZeneca, Amgen, Gilead Sciences. It's got a very strong pipeline of growth, especially in oncology and rare disease, as I mentioned, and metabolic drugs. The biggest upside is catalyst driven. Trial results, approvals and licensing deals definitely help in this area. The other subsector is really med tech and devices. Think of companies like Intuitive Surgical. It is the leader in the surgical robotics area, and it's really minimally invasive devices and AI-enabled diagnostics, and these are expanding rapidly. These businesses have recurring revenue, high margins, and a very strong balance sheet. Third area is really in diagnostics and precision medicine, and the leader here really is Illumina, and has been for quite some time. Liquid biopsies, genetic testing are moving into mainstream clinical practice, and this is really a platform shift for better diagnostics and more effective treatment, which drives adoption. And the last area really is around healthcare and digital health. And in companies in this area, you can think of Tempus AI and to a large extent, NVIDIA. NVIDIA obviously is not a healthcare stock, it's a tech stock, but it's providing core infrastructure, which is powering medical imaging, diagnostics and drug recovery. So it's a key stock in the sector, if you like. So AI is reducing costs and improving improving outcomes in drug discovery, imaging, and care delivery. And this is where healthcare becomes a true tech plus defensive sector, as we're seeing at the moment. So what could happen next? Well, obviously we talked about aging population, etc., but you would expect healthcare innovation to continue to rapidly increase, continuing to attract capital. And we think of a lot of these small drug companies, often they move the most in terms of the NASDAQ composite index, and therefore it's definitely a sector that you should be looking at. Especially with clinical trial success, and that remains very strong. Regulators approve more breakthrough therapies, and the drug companies are putting those through to regulators all the time. Medtech companies keep delivering consistent revenue growth, and AI continues proving itself in terms of healthcare systems. So this sector is likely to stay in the leadership rotation, rotating out of the AI stocks perhaps into healthcare. Others would be the communication services sector, industrial sector, which I talked about more recently. I'd now like to focus on one or two stocks in particular. One of them is in this sector, and that is Ally Health. So Ally Health is listed in Hong Kong. It's up 32% year to date, and it leads the Hong Kong market's gains in 2026. It is a healthcare technology, and it's a spin-off from Alibaba. Ally Health as in Alibaba, and it has been climbing because of investor optimism that it is well placed to benefit from the use of AI in the sector. So Ally Health, it ties to the parent company Alibaba and is put in a prime position to cash in on AI adoption, particularly in China's healthcare industry. So that the analysts are rating this as a strong buy, and one of them said it's the best stock in this sector by country mile recently, and it's climbed to 87% over the last 12 months. So why it matters, we mentioned already, it's a pure play on healthcare AI in China, with Alibaba's data, capital, and ecosystem driving it to a structural edge, giving it a structural edge. So what's next here really is momentum stays strong, AI adoption continues and accelerates. Near-term pullbacks are likely after such a sharp run, but look at Ali Health as a leader outside of the US in this healthcare innovation area. The second stock I would like to look at today, and the third, are really ones that are reported over the last 24 hours, not in the healthcare area. One is Apple, obviously a leading stock, one of the Magnificent Seven, and its result was very pleasing. The stock gained or surged higher by about 3%, but gave a little bit back because it's now trading up about 1%. So it reported after the close, and there was a lot of focus on the iPhone demand and how fast AI features translate into revenue in the same way as Microsoft and Meta in terms of translating that AI into actually earning some money from it. So in terms of the iPhone, one headline I saw after the close today was it was the best quarter ever for iPhone. And it's the revenue for the quarter in iPhone sales was 85 billion compared to 78 billion expected, and only 67 billion same time last year. So a very pleasing iPhone sales result for Apple. So the other thing why it really matters is it's shifting from this hardware-led growth, which is the iPhone, into AI-powered services. And it will be a key driver for the next leg higher for Apple as it moves from just the hardware to other services, particularly in the AI space. So we would expect short-term volatility, in terms of results. It's definitely had a tough old time this year, been one of the worst performers in the Mag 7, but hopefully this leads to longer-term execution of AI and services. And higher sales in their hardware area will lead Apple to be re-rated, we hope, and or trade sideways depending on whether they deliver or undeliver on the promises. The last stock I'd like to look at briefly is Mastercard. It's is up 4.3% today, so it's definitely did well on its strong earnings, and it's supported by very resilient consumer spending and travel demand. So if you think of the consumer spending, it was definitely mentioned by the Federal Reserve Chair Jerome Powell yesterday as part of a press conference that he was surprised by the resilience of the US economy in terms of consumer spending. So that's still a driver in the market and definitely helping and Mastercard in this area. So why it matters, it's a high quality stock. Global payments growth continues, strong margins, and has minimal credit risk. And what's next really is a steady upside over time, with earnings growth likely to outpace the broader market, even if macro conditions soften. So what we're focusing on next in the market is continuation of the earnings cycle, and leading stocks are reporting again over the next week or so. Tomorrow we've got ExxonMobil and Chevron, two leaders in the oil industry. Monday we've got Palantir and Walt Disney. Tuesday we've got Advanced Micro Devices, and then three stocks within this health sector area: Merck, Amgen, and Pfizer. Also in that area, we've got Eli Lilly and AbbVie, both reporting next Wednesday, alongside the two majors in the Mag 7, Alphabet on Wednesday and Amazon on Thursday. So a big week in reporting again. This week and next week are the biggest amount of companies reporting. So it'll be interesting to see how those results go and how that drives the market. either higher, sideways, or downwards, depending on, it's really around the expectations, not necessarily just the revenue and earnings per share. It's really around how these companies are projecting their expectations and whether those expectations exceed what the market is thinking. So best wishes with your trading and have a great weekend. Thank you.